Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with thinkorswim. And today's discussion is all about charts. We're going to be using stock charts for the planning and placing of just short-term trading strategies or potentially even longer-term investing approaches. So stock chart tools for trading and investing is a topic. I think there's going to be a lot for just about everybody watching. Great to have you all here. Let me first of all say hello to everybody who's already chatting in out there on YouTube. Great to see all the familiar names. Hello to all of you who are new. Hey there, Josh and Mighty Mouse, JRTR, Greg, Paul, Eva, JP, Will, on and on the list goes. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I do want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, well, that's great. Those recordings are a great way to watch these videos. But if you'd like to be here in our live stream audience, this is a Wednesday webcast series, and we kick things off promptly at 2 Eastern time. You're certainly invited to join us. Now, I also want to let our live stream audience members know that my very good friend, Brent Moores, is going to be hanging out there in the chats with you. I can see Brent's already been chatting with some of you already, but Brent and I are now in our, 21st year of working together as market educators, Brent. So yeah, Brent brings a ton of experience to this discussion. He is going to be keeping an eye on the chats. He's going to be answering any questions that I can't get to just during the flow of the presentation. So thanks for having my back there, Brent. Brent and I would also like to issue an invitation to everybody listening to follow your favorite Schwab presenters on social media. You can follow Brent and me on X. You can find Brent there at Brent Moore CS. You can find and follow me on X at Cameron May CS. Now, as of just a few months ago, you can also follow me on LinkedIn. Just go to linkedin.com/in. That's typical prefix, and then throw on a slash Cameron May CS. That'll take you right to my profile. Give me a follow there. I'm very active on social media. If you reply to one of my posts there, I just try to reply right back to you. It's the best place to connect with me in between the live streams. But let's get into this discussion. A lot that I want to cover today, so don't feel pressure to try to memorize every single click that I make. But as we go into this, we do need to be aware of the risks associated with both trading and investing. So bear these important disclosures in mind. All corporate or issuer names and market data shown are for illustrative purposes only and are not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Schwab does not recommend the use of technical analysis as a sole means of investment research, and any investment decision you make in your self-directed account is solely your responsibility. Okay, so let's set the agenda for today's discussion. First thing that you should know is I'm going to be using some trading and investing software. It's known as thinkorswim Desktop. Not everybody here is going to have that already, so I'll show you where you can go find it and download it for free within your Schwab Online account. Then we're going to go to the charting capabilities on that thinkorswim platform, and I want to talk through charting through 3 lenses. Number one, how might an investor or a trader use some charting tools on thinkorswim to get a gauge of what's going on with the markets? Then, as we go plan for trading or investing, I want to talk about maybe a different set of tools that might be used for planning and placing a stock trade. And then finally, a final set of tools that might be used for planning and placing a stock investment. And before we're done, we're going to make sure that we actually do place a trade. So if you've never done that before on thinkorswim, I'll show you how to push those buttons. Okay. So let's get right into it. Hey, Pitts says, great radio voice. Thank you. Appreciate it. Well, let's go right to the download feature. So yeah, for those of you who aren't familiar with thinkorswim, it is trading and investing software that has a separate suite of resources to what's available on your Schwab Online account. But you can download this software if you log into your Schwab Online account, go to the Trade tab, and you'll see thinkorswim Desktop right there. So if I click on that and I scroll down that page, it's just a big old blue button right in the middle, Learn How to Enable thinkorswim. You click on that, follow the on-screen prompts, it'll download the software to your computer, and it'll create a little icon on your computer's desktop that looks like this one right here. It's called the thinkorswim Splash. But in any case, you'll double click that icon to launch the software, or you can find the software in your computer start menu after the download, and you can launch there. So when you go to launch, it'll bring up a login screen that looks like this, and you just use your Schwab credentials, your Schwab username, Schwab password, and that will allow you access to both your live accounts. We can do some live trading in this software, or we can do some practice trading through what's called paper money, and that's what I'm going to actually be demonstrating today. The paper money tool is a fantastic feature of thinkorswim. It allows us to experiment with new tools and even new strategies before doing it in real life, so we can work out all the kinks first. All right, so let's go to that thinkorswim software. So this is essentially the home page on the software. When we first log in, we wind up on the home screen, and I'm going to go to the charts. And let's load up a symbol. Now, not everyone knows every symbol they might want to trade. So if you do know the symbol, you can just type it in. For example, I'm going to be loading up the S&P 500, or you can do a keyword search, like start typing in S&P 500, and it'll propose for you what symbol you might be looking for here. So here's the S&P 500. Let's just type in the SPX. And we're going to be using this initially to acquaint ourselves with some of these chart tools. So if this is your first time here, let's get acquainted with just the general navigation of the chart tools. When we first type in a symbol, we can see the description of that symbol right here, the title of, or the name of the company. We can see the current level for an index or the current price for a stock. We can see whether we're up or down in dollar or percentage terms today. See the bid price or the ask price. Down below, we'll see some additional numbers. We'll have the date for wherever we're pointing on our chart. So if I stop right here, you can see that's going to be July 1st. It's also telling me the OHLC values, open, high, low, or close. So I can see that on July 1st, the O is 6187. That was the opening S&P value or level on that day. Got as high as 6210, as low as 6177, and closed on July 1st at 6198. So we're just looking at these numbers right here. The R is the range in price from high to low for the day, and the Y is just the position of your cursor along what we call the price or the vertical axis. So as we move up, you'll see this Y value going up, and you'll see as we move down, the Y value is going down. Nifty little tools that are available for the trader or investor right there just by moving the mouse. Now let's get acquainted with some of these deeper tools. So the first thing for our chart users here, our chart fans, you should be aware of is that if you have a favorite technical, we call it a study, you might also refer to it as a technical indicator. There's a huge menu of available indicators that can be accessed by using this flask icon. Why is it a flask? Probably because we're about to do some chart experiments, just like in our high school chemistry class. We can go load up our favorite, I suppose, experimental tools like the flask. Anyway, we're going to click on that flask icon, and that allows us to add a number of studies. These are organized in alphabetical order. You can see that there are literally hundreds of them. So we can go down and find it if we just want to read through, or we can also do a keyword search. So let's add an example study, and we're going to be using this as a common thread through our full discussion today. So let me ask our veteran users of charts, if you were to name one technical study as the most commonly used technical indicator, what do you think it might be? Now, I don't have the data to say this is absolutely it. This is just sort of an anecdotal observation about what appears to be the most commonly used technical study. But I think that a lot of people are going to say it's probably a simple moving average. I'm going to add that to the chart. So I'm going to start to type in a keyword of simple. Yeah, Pitts says moving average. Eva says SMA. Yep, Greg, you all were right on that. In any case, let's type in the keyword SIM. Let's add a simple moving average to our chart. And as I do that, I'm going to modify it just slightly, okay? By default, thinkorswim doesn't know exactly what the investor or what the trader has in mind regarding the time frame of their would-be position. So it just starts short-term. So this, we're on the way that I have this chart set up at the moment, this is a day-by-day chart. It's a year daily chart. Okay, so this is looking at 9 days as a default for this indicator. Most technical indicators or technical studies can be customized. So I'm going to lengthen this one just a little bit. Let me come over here to the little gear icon. And how about we crank this out to 40 days? I'll explain why in just a moment, but we'll just change the length of it to a 40. Click OK, click Apply. And what we're left with is this green line. See that green line going through here? If you're not familiar with a moving average, Cherion says what they said. Yeah. If you're brand new to charting, this is probably going to be fun. Yeah. So welcome. It's great to have you here. But here's what a moving average is. If you're not familiar with this at all, you'll notice over here to the right, once we've added this, there's a number in a green box. That's the current value of this moving average. And what this is explicitly doing is it's telling us 6909 is the average closing value of the S&P 500 over the last 40 days. It's 40 days because that's what I told it to calculate. Now, that's where it is right now. When the S&P was lower, like back in the summer, that average value was lower. So the moving average value at that time would have been down around 58.60. As we're climbing in levels, the average level is also going higher. So this is known as a simple because it's a pretty straightforward calculation. It simply looks at closing values over a prescribed time frame, moving because average values change over time, average, simple moving average. So how is this used either by a trader or an investor? A couple of potential uses. Number one is that it can sometimes indicate where price floors and price ceilings might be. Quite commonly, if current day levels get above where they've been over the average time frame, and then we start to pull back, that may spur buying. So for example, if we're way above where we've been, this is not a great example of being way above. In any case, if we're quite a ways above, and then we pull back down to average over the, let's say in this case, the last 40 days, for some, they might decide, hey, that's pretty good. Maybe I'll start to buy again, and it can drive prices back up. So that can act as a price ceiling, or pardon me, as a floor. It can also sometimes act as a price ceiling if we're below average and people are just trying to squeeze the last few pennies or dimes out of a position. They may sell if we can get back up to average. Now, another thing that it might do is give potentially a clearer view to some traders or some investors. They might see this as a clearer view of a trend, because there's a lot of day-to-day, week-to-week choppiness in the trending of an index, in the trending of a stock, and this average might just smooth that out. And for some, despite choppiness up or down on a day-to-day basis, as long as that trend line is moving higher, they might confirm that overall, this index or this stock still looks bullish or upward sloping. On the other hand, if our trend line is moving down, that might be an indication that prices are weakening net over time. All right, so there's our simple moving average. Now let's use that. I want to look at a chart through three different lenses: through the lens of just someone who's trying to get a gauge of market conditions, through the lens of somebody who's planning a short-term trade, and through the lens of someone who's maybe looking for a longer-term investment. All right, so starting with that first, how might a trader or an investor get a gauge of what's happening with current market conditions? Well, a common approach, it's not the way that everybody does it. Everything that I'm going to be doing today is just an example of how it might be done by some traders, some investors, okay? But some will use a combination of trend lines. So I'm going to mix up my trend lines here. First thing I'm going to do, though, is I'm going to go to a longer-term chart. Let's switch this from a daily chart to a weekly chart. Now, as we do, that's going to introduce us to a couple of other tools. So let's make a couple of other adjustments here, okay? So I can switch this to a weekly chart. If I click on this time frame up the top, D stands for day. We go to, let's say, a 3-year weekly or a 5-year weekly. Maybe let's go to a 10-year weekly. All right? So that's a longer-term chart. We can still see our trend line, but it's, boy, that's a lot different than the one that we're just looking at. That's because it's now looking at 40 weeks instead of 40 days. So the current value is the average closing value on a weekly basis on the S&P 500 over 40 weeks. That's very different. That's a longer-term outlook rather than shorter term. Now, another thing that some might do, some other tools that we might be aware of, is that traders typically like to see day-to-day activity, maybe for the much more granular refinement of entries and exits. For an investor, they may not care about what we call candlesticks. So they may choose to switch up the chart style. I'm not going to do that today, but if we wanted to choose this a different style, we could change our chart type from a candle to, let's say, a line, which is just going to connect closing values instead of showing us open, high, low, and close values. But let's switch that back to our candle. Another thing that traders and investors might both do is use our drawing tools to make notes to themselves, to highlight areas of particular interest. But let me go to the drawing tools and maybe select one that's quite commonly used, and that is the trend line tool. And with that trend line tool, with 2 clicks, we can just draw a line that may have significance to that trader or investor. So I can click once to start a line. It's not a click and drag. It's 2 separate clicks. Click once where we want to start, click once where we want to end, and we can start drawing horizontal lines. We can click once and click again to draw diagonal lines, and so on, right? Just be aware, lots of tools for drawing. We can draw ovals, we can draw rectangles, we can draw Fibonacci's, for those that use Fibonacci's. Wiley says, the older I get, the less noise I want. I think that a lot of people can relate to that sentiment, Wiley. Whereas I think that there are plenty of traders watching this webcast. I think just about everybody in this audience is very likely to describe themselves, or at least a portion of their portfolio, as being more investing oriented, right? But once we've drawn a tool here, or drawn a line here, we can right click on that and clear that tool off. Either just remove an individual drawing or clear them all off by selecting clear the drawing set. So let's select yes, clear that off. All right, but now that we've acquainted ourselves with some of those other tools on the charts, let's use this combination of potential trend lines to get at least one view of the markets. Now, this is not a definitive view of the markets. John says, why 40 units instead of, say, 30? It's a very good question, and preferences can certainly vary on that point, John. But I'm going to be using 40 specifically because this is what's known as a crossover system that I didn't design. It's just it's widely used, not by everybody, obviously, but typically a 40-week simple moving average is an element of this approach. And that's combined with a shorter term trend line. So let's add another one. Let's go back up here to our Edit Studies icon, and let's just go through that process again. Let's choose a simple moving average. Let's add that to our chart. There's our default of a 9. I'm going to change this one to a little bit longer. Okay, pardon me, a little bit shorter. Let's change this to 10 weeks on this weekly chart. And since it's shorter, it's going to be a little bit more jittery. It's going to be more reactive. So let's make this one a different color. Let's go with maybe a warmer color, red. Actually, I realize that not everybody is going to be able to see the difference between green and red. Not everybody has that ability to see that color distinction. So let's make the red one thicker as well, just to make it clearly different from the green. So we're going to give it a width of 3 out of 5. Let's click OK, click Apply, click OK again. So here's what we're left with. Julie says, thank you so much. All the videos are incredibly valuable and insightful. Excellent. Glad you find value in these. Yeah, I really enjoy what I do. That's why Brent and I have been around for more than 2 decades doing this stuff. It's always fun. Right, but let's say that we are that trader or that investor, and we're just trying to decide if I'm about to place a new short-term or a new longer-term position, should it be more bullish or should it be more bearish? And what some will do is they'll look at the interplay of this shorter-term trend line with the longer term. And if the shorter term, in this case, it's a 10-week moving average, if that's running up above and staying ahead of the 40-week, what that might mean is that prices, even over a shorter-term time frame, are still getting stronger. So our 10-week is still above our 40, that's still bullish. And if they're recently just crossing over, so what do we actually call this? Those of you that are familiar with this crossover system, what's this known as if the short-term trend has been weak, but then it starts to strengthen and it runs ahead of the longer term? What do we call that? There's kind of this is not my term. Don't get too excited about it. That's known as a golden cross. Okay, that's somebody with a flair for the dramatic, but they're trying to make a point. It's a signal that maybe our trend is strengthening again and maybe set to go for an upside run. In this case, that worked out. Now, what do we call it when there's a cross in the opposite direction? So our short-term trend weakens. The long-term still kind of tooling along, less reactive to day-to-day changes, but the short-term weakens and there's a bearish crossover. This is known as a death cross. Again, flair for the dramatic. We're not going to die just because the 10 weekly SMA went down below the 40. But for some, that might cause them to pause on new bullish trades, maybe pause or slow down, scale back on new bullish investments. So that's going to be our first, what I'd call a study set. It's a set of technical studies. Now, before we move on to the second one, I want to make the point that we can save these. I'm going to go up here to where it says studies, and I'm going to save this study set. So let's just call this our market study set. Let's just save that. So it's intended for a view of markets. And so if we were to switch over to, let's say, a different, maybe we're looking at an individual stock. Let me bring up General Electric just to pick on it for a second. Let's say that we were on a one-year view and we had deleted our studies. Let's just remove all the studies. Go up to studies. Let's just remove them all. So we're looking at GE. We've done our analysis of whatever we wanted to do. And then we're back over on an index. How about we just type in the symbol here, comp for the NASDAQ composite. And we might want to see that, that market set again. Well, we could go back up here to studies where we previously saved that set. And let's load up that set, that market set. There we go. There they are again. We just have to remember to swing this back to a weekly chart to get the 10-week versus the 40-week. And ooh, look at this. There's starting to be a narrowing on our NASDAQ composite. Okay. Anyway, let's go back to a one-day chart, one-year, one-day chart. Let's clear off these studies. Actually, here's what I'm going to do. Let's just take off one of these. Let's leave our 40 on there. And to remove just one, we can go to our Edit Studies icon. Here's that 10. Let's close that out and apply. And let's transition now to planning a short-term trade. So a short-term trade might be looking at things through a short-term lens. Now, 40, that was intended to be looking at a 40-week period, which is almost an entire year. Let's stay on the daily chart, but just look at maybe 50 days, much shorter than 40 weeks. And Paul is saying, hey, you could set up the 40 and the 10 as a 50 and a 200. That's also true. 50 days is 10 weeks, basically. 200 days is basically 40 weeks. Yep. Good observation there, Paul. But let's change the 40 here. Make that a 50. But staying on daily chart, it's still going to be a shorter term trend line. So let's click OK and click Apply. And let's say that we have a trader who's looking to trade individual stocks. So for today's example trades, for today's example investment, we're gonna pick on Walmart. It's not a solicitation to buy Walmart. Don't take it that way. All right. This is just an example. But what some traders might do as they're planning a short-term trade, first thing they might do is try to gauge what's the current trend. Could they use a crossover system like we were just using? Actually, yes. Using crossovers is sometimes done on indices, sometimes done on individual stocks, sometimes not done at all, depending on the trader or the investor's preference. But let's use this moving average in a slightly different way. Let's say that we're looking over the last 50 days, and we just want to see that on any trailing 50-day period, that trend seems to be strengthening. So this is sort of a intermediate to potentially moving toward a longer-term trend. This is one that can change relatively quickly. You can see a little dip, change from downtrending to uptrending here. A little bit of uncertainty right through there before we started to strengthen that trend again. All right, so step number one in a shorter term trading process might be to confirm that trend. So if we're upward trending, maybe we're looking to get in and out of bullish trades. If we're downward trending, maybe looking to get in and out of bearish trades. But for a trader, that's typically a relatively short-term effort. even in a bullish trend, there may be narrow windows of opportunity to try to grab a stock and get back out before it turns and starts heading back down again. So for the timing of the changes in momentum within that trend, sometimes a trader will use what's known as an oscillator. It's a momentum indicator. So I'm going to come up here and let's introduce you to a momentum indicator. Again, it's not the momentum indicator, it's a momentum indicator. And I'm going to use the MACD histogram. Yeah, Pitt says, do you use the MACD? You got right there with me. Do you use the MACD histogram to identify uptrends and downtrends? No. MACD histogram actually doesn't tell us longer term or intermediate term direction. It only shows short term shifts in momentum. So let me show you this. Let's add the MACD histogram. I'm not going to get deeply into the nitty gritty of how it's built. Let me click apply and click OK. I will say with each of these indicators, if you want to learn more about them, I have a suggestion for you. Go to our channel. So number one is of the 432 people watching, I know some of you are new. If you are new, pop down below the video right now, click on the subscribe button. It only takes a second. It doesn't cost anything to do that. But we maintain a channel called Trader Talks. Full name is Trader Talks Schwab Coaching Webcast, but you can join live streams here. But you can also find playlists of previous webcasts or episodes right here. Now you can, a nifty feature here is there is a search capability to look for key topics, such as maybe we're trying to learn about MACD. So we type in MACD, we hit enter on our keyboard, and what do you know, using the MACD indicator for short-term stock trades, there's a 45-minute presentation I dedicated to explaining how the MACD is constructed and how it might be used for planning and placing a trade. So there we go. If we're trying to learn more about moving averages, maybe we type in moving average, and here's beyond simple and exponential. I was talking about trading with something known as the whole moving average. So we have just about everything covered. And there's James talking about something related, but not exactly the same, moving average envelopes. All right, but back to our chart, let's discuss how a trader might use the MACD within a trend. If we're bearish, we might be planning a bearish trade. What might be a signal for a bullish trade? Well, some traders will look for a dive. Well, just to revisit, the concept of the MACD is a gauge of short-term momentum. Sometimes the buyers have the momentum and prices are rising, and we'll see that displayed as these bright green MACD histogram bars. If there's a shift in momentum, we'll see that the bright green shift to dark green and will start to come down, and that may be signaling that we're at or near short-term price peaks. It's not a guarantee, of course. Now, for someone who's trying to buy low and then hopefully sell high relatively soon, they may look for the MACD histogram to be low, where the sellers have had the momentum, but for a momentum shift represented by a bright red histogram bar going to a dark red histogram bar. I actually have a name for this, just my name. I refer to this as a red shift, okay? But you can see examples right here. You can see one right here on Walmart. You can see a littler one right there. You can see more right back here. But we might just first of all be looking for the upward trend and then look for that red shift as an entry. And then as an exit, the trader might look for a green shift, or let's look right here. We have that red shift very recently, maybe happening just a couple of days ago. And it looks like we haven't budged much since then. So prices are pretty much the same, might still get on that sort of a trade. But instead of waiting for a green shift, the trader might just look to get back up to previous highs. I think what we might do today is let's do a trade under that assumption. All right, so there's a sort of a trader perspective of some tools that are available on thinkorswim. How about we save that? Let's go up here to our studies. Pardon me, not our studies. I got a little bit ahead of myself. That's exactly what I intended to do. Sometimes I move forward mentally while I'm still demonstrating something. But let's save that strategy set, and we'll call this our trading set. Let's save that. And now I'm going to offend everybody and get rid of our newly learned MACD tool that we all want to play around with a little bit more. And I'm going to replace it, shifting gears to investing. Now, while we're here, let me click apply. There goes our MACD, but we still have our relatively short-term trend line. An investor may not care about what's happening in the short term. Investing is literally taking a position, looking to hold it for a long period. So maybe instead of looking at 50 days worth of trending, we might look at maybe even at least 100 days. That's 100 trading days. That's nearly 6 months. Let's click OK and click apply. And so now this is just showing us a trend line that's going to be very slow to change direction because it's looking at average prices over the last 6 months, and a down day is hardly going to affect that. A down week is hardly going to affect that. But for an investor, they may look at a longer term view like this for a general gauge of whether the stock that maybe they're intending to invest in is still moving higher. Now, as we go into this discussion about investing, I'm going to throw this out. Not every investor uses charts at all. As a matter of fact, it would be my guess, most investors don't. So it's never my purpose to try to convince my audience that this is the way to do something. But if an investor has an inclination toward using charts to hopefully supplement their efforts, maybe they've looked at Walmart as a company. Maybe they really like the sector that it's in. There can be a number of motivations that may precede even looking at a chart. But let's say that they're just trying to decide, just get a little bit more evidence. Okay? In any case, so we're going to look at this through that longer term lens. Very slow changes to trend. Look at this big dip we had recently. Didn't even cause a hiccup in this trend line. All right, that's how slow to react things are. That might be seen by a trader as being a fault. It might be seen by an investor as a feature. So now, how might a trader look, or how might an investor look to refine the specific entries? Well, one tool, I'm actually going to introduce you to a tool that is proprietary to the thinkorswim platform. Can't find it anywhere else. It's known as the market forecast. Let me load that up here under Edit Studies. And it might be used by an investor to generate infrequent entry signals. It actually doesn't generate signals very often. So I'm going to go to our market forecast tool. And as I do, how many of you are familiar with this market forecast tool? I know a lot of you are because I made a video about this and over 90,000 people watched it, which is awesome. Let's add this to our chart. Market forecast tool, click apply, click OK. When I first put it on, it's going to look kind of complicated. I'll make it as simple as I can. There we go. Click apply and click OK. Just in a nutshell, what we're looking at here is 3 oscillating lines that are measuring momentum in 3 different ways, over a very short-term time frame, a little bit longer-term time frame, and then a longer time frame still. So we have the red is the most reactive line, the blue is a little bit less reactive, and then finally the slowest to change is our green line. And possibly, now, there are lots of ways that this might be used. Could even be used for trading, but possibly the most common signal that's looked for using the market forecast tool is what's known as a cluster. And it simply means that our 3 oscillating lines have clustered down low at the same time. It means over 3 different time frames, momentum has shifted and maybe down at extreme lows, maybe meaning that price itself has reached an unusually extreme low. And for an investor who's looking to get into something for a long period, conceptually that might be an enhancement. It's not guaranteed to improve things, okay? Pitt says, boy, that's my kindergarten art at work. Yeah, it's kind of a noisy indicator, but once we learn how to use it, it's really not that noisy. For those that looking for clusters, it's typically defined as all 3 lines being down below 20. You'll notice the The range over here goes from 0 to 100. If all three get down below 20 at the same time, that's typically seen as a cluster. Maybe I'll draw in a line here at 20 just to help you visualize that. The line's not necessary because we can also see the values right up here. If we point at a specific day, it'll tell us where the red line is, where the blue line is, and where the green line is. So if I just pause right here on this day, I can see the red's at 78, the blue's at 57, the green's at 20. None of them are below 20. None of them would be considered to be at lows. If I go to this day, though, the red's at 3.5, the blue's at 8.6, and the green is at 7. All three of our momentum lines are very low, and that may signal that price might be at lows. Now, notice it didn't exactly nail the low, but for an investor, do they really care if they got in on a Tuesday and the low came in on Thursday? Probably not. All they're trying to do is make sure they're not buying at what seems to be highs. Okay, so we might have entered really any time during this time frame before all three started to rise out of the 20 line again, or 20 range again. Now, since then, there has not been a single time. Was there right here maybe? Nope, not a single time when all three have been below 20 at the same time. So investors don't care. They don't need signals every week. They might just be looking for an occasional signal flare to go up on a indicator like this. But there is a set of technical tools that might be used in the planning of an investment. Obviously, this is not to get in quickly, it's not to get out quickly. When might the investor choose to get out? Well, it might be just when that stock is no longer serving maybe its diversification purpose for the portfolio, whatever other reason like that. But let's save this set. This is our investing set. Okay. So now I'm going to do something. Let's switch this back. Let's load up our trading set and let's place a trade. Let's say that our trader saw an upward trend in the short term. They saw a momentum signal right down here. It looks like price hasn't started to move yet. So even though the signal was a few days ago, we're basically at the same price. And how about we're looking to get out if we can get back up here to 135? Well, that's if this trade works. But if the stock starts to falter, boy, what is that? If we get in right now at 128 and we're looking to get out at 135, there's only about $7 of reward potential in that short-term position. For some, they may not want to risk that much. If they think they might make 7, maybe they cut their risk to half that amount. Let's put in an order to buy the stock right now. If it falls by, let's say, even $3, we're going to pull the plug. If we can get up to 135, let's take profits up there. So how can we do that? So if we're in at 127.5, let's put in a stop order down at 124.5. That would be about $3 of risk with about $7 of potential reward. Shafali Grover 1532 says, can you create a scan using market forecast? Yes, you can. As a matter of fact, I've done that in some previous webcast. There's not time to set one up today, but yes, it can be done. Anyway, but let's place our trade. Let's go to our trade tab. Let's make sure that we're looking at Walmart. And here's how we can put in an order to buy some shares and then put in 2 sell orders. One that will take our profits if they are achieved. Another that's to try to cut off the losses if that's what's happening. So we go to the ask price here and right click on it. And we're going to put in a custom buy order with what's known as an OCO bracket. The OCO means that one of our sell orders, if it's filled, is going to cancel the other sell order. So an OCO bracket. There we go. So what this is going to do by default is bring up an order to buy 100 shares at $127-ish per share. That'd be about a $12,700 trade. How about we just leave it there? Of course, we'd want to tailor this to how much risk that trader or that investor was planning. Let's put in, how about we do this? Let's put in a market order here. And where do we want to direct this? Let's put this in our, let's put this in our, IRA is okay. I'm going to direct this into our example IRA account. But I'm going to put this in as a market order. Obviously, when we put in a market order, we might not be thrilled with the price we get. We're looking at maybe paying around $127.73, but that can change. We'll see. We're going to put in a limit order, though, at $135. That means, hey, I want to make at least $135 as I sell this. That's my limit. I want to sell at $135. That would be approximately a $7 profit. I'm going to make that sell order good until I cancel it, good till canceled. The stop, we were going to put down there about $3 below our entry. So let's put that in down at 124.75. Okay. Let's make sure that's good till canceled. So there's our trade. Let's click confirm and send. Buying 100 shares of Walmart at the market price, whatever that turns out to be. If we can get up there and sell at 135, we're going to do that. Or if it falls down to 124 or below, we're going to stop the bleeding there. Now, a stop order is not a guarantee that we'll sell at that price. If it falls through that price fast, if it gaps over that price, we might sell for less, but this is just sort of our trigger price. There's no commission on this trade, but there can be on some types of trades. And I'm going to send this order off. There we go. And we just bought it, 127.72. All right. Guys, we've accomplished what I set out to do today. I wanted to look at some tools available on the thinkorswim platform for planning a stock trade using the charts for trading or for investing. So I know that was quite a bit. This webcast is scheduled to be added to our playlists on YouTube. So that reminds me, definitely, if you're new to these webcasts, make sure that you have subscribed to our Trader Talks channel. You can pop right down below the video right now, click on the subscribe button. It doesn't cost anything to do that. It only takes a second. But our YouTube channel is where you can join the live streams, or you can find playlists of previous webcasts. So as an example, and maybe I'll start right from scratch here. So here's our YouTube channel homepage. There's where we can join the live streams. We can find the playlist here. We can even do keyword searches right there. But if you want to find this webcast series, it's called Getting Started with Thinkorswim. Today we acquainted ourselves with the chart, some of the chart features, but there are lots of other features on Thinkorswim. If you want to see those, go to the playlists, scroll down. Mine happens to be, I've been banished to the bottom. Getting Started with Thinkorswim. You can click on View Full Playlist. And there's you might consider these previous episodes. All right. Now, let me do this. I'm going to chat in. Keep an eye on your chat. I'm going to put in a link there. And this will just link you right to that webcast series. Now, I have another suggestion for another series that I teach. If you want to learn more about charting, I actually have a webcast series on Fridays that's dedicated to charting techniques. It's actually referred to as advanced charting techniques. So if I just hit the back button here, if we're looking at our playlists and I go down about halfway down the list in this case, so not entirely banished to the bottom, it's right there, advanced charting techniques. There's the full playlist. Even though it says advanced charting, I do try to go at a pace that everybody can follow. That's always my personal approach. Let me put that link in the chat as well. And with both of these, I will put the links down in the video description after the webcast is concluded so you can find it there. So some absolutely fabulous resources that are available to you on our YouTube channel. Another thing you definitely want to do is to follow your favorite Schwab presenters on social media. So Brent and I both can be found on X. So if you want to follow Brent on X, you go to @BrentMooresCS. My handle on X is @CameronMayCS. And if you reply to one of my posts, I just reply right back to you. So for example, silver had a big down day yesterday. I wanted to know from my followers, do you think that's going to continue? Is there going to be a rally in precious metals? In any case, if you reply to those, I just try to reply right back. Now I do the same thing on LinkedIn. So if you follow me on LinkedIn, just go to linkedin.com/in and then /CameronMayCS. And I've only been here for a few months. So give me a follow there. And if you comment on one of my posts here, It allows for interaction when the camera's not on. All right. Everybody, thanks for giving me your time today. I saw we got up to 400, 500 people watching. And as I click refresh on the side screen here, I can see 92 people have already clicked that thumbs up. That's always appreciated. When you click that like button, it's like applause to your presenter for doing a good job, but it also gives my videos a little boost in the YouTube algorithm, helps more people find them so they can learn things like what are the tools available on thinkorswim charts for trading and for investing. So definitely, if you enjoy a webcast, click that like button. It's always appreciated. Brent, thanks for helping out in chat. Everybody, I'm going to be looking for you in a future webcast. I have something every single day of the trading week as long as the markets are open. And if I'm not on vacation, I'm here delivering one of my webcast series. So I'll look for you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.